Time now to get some insights on news that's shaping markets. For that, we want to welcome in Dale Smothers, President and CEO, RDS Wealth Management. Dale, thank you so much for joining us today. All right, you described this rally that we've been seeing, the record after record, especially when it comes to the S&P 500 and NASDAQ, as more than just hype. You see real fundamental tailwinds here. What gives you that confidence right now?
Yeah, and it is a lot of momentum that's carrying this consistently higher. The third record high close in a row on Wednesday, the 12th of the year. Diane, we expect an S&P 500 at the end of the year somewhere around a 65-50 point range. And we wouldn't be surprised if we actually miss that call to the high end. So if we see a 66 or 6,700, that is momentum for sure, and that is maybe a fear of missing out or animal spirits, all the names that we can give it. But earnings are supporting that, and that is the fundamentals that we're seeing here. The earnings of companies and the broadening out of this particular rally. It's hard to say that it's not still an AI-led rally, because even on these companies that have no real tech name per se, you're still hearing on the calls, the CEOs, they're coming out and giving strategies around how they're going to adopt AI into their business models. It's almost a need or an obligation to discuss their AI strategy just to keep shareholders involved. So we know that AI and tech will lead the market higher or lower, depending on how tech goes. But I see a broadening out and I see a strengthening in earnings that are causing me to realize this is a little bit more than just a momentum, animal spirits, or fear of missing out buy. There are reasons to buy good names, and we want to be a part of that.
Dale, I'm glad you brought up that AI on earnings calls, because I feel like it must have been a couple of years ago, or for sure by last year, where it was like it seemed like on every earnings call you heard about a company talking about incorporating AI, and it's like I mean, now it makes more sense, but at the time it was like a beverage company. You're like, what? I don't understand the tech piece here. All right, so given that we are consistently hearing that theme again this time around, and it's not about uncertainty this cycle so far, do you think we're nearing like peak AI in terms of the narrative of just about every company? Obviously, this makes sense for the tech. You need to hear about that from Alphabet, Google, but is there real substance behind this beyond the tech sector?
Diane, that's a fantastic question, and one that will certainly tell the tale over the next 6 to 12 months. Our expectation is that AI will still continue to be a thing until it's not, and then we'll turn our focus onto quantum computing, which is something it's hard to even wrap our mind around, and how that could potentially change the world. Artificial intelligence is here to stay. Whether or not it's the mainstream thought in, say, the CEO's mind or the CEO's phone call on earnings, that's hard to tell. But I'll tell you, AI has certainly shaped every single industry, just as you mentioned. And this artificial intelligence push, coupled with quantum computing, is now starting to create what I would say is the next frontier of problems we have to solve, which is data storage. And the energy that it takes to run these data centers is incredible. And to be real frank with you, that could be the turning point on the momentum that we see in AI. Once we realize that we may not have the energy necessary to power such a behemoth as AI, then maybe there is for instance, Google announces this significant investment into AI. Well, what good does it do if we can't store the data? And that all results from a maybe less than stellar energy grid. That's the next investment that has to happen. And it could very easily cause a little bit of a pullback or a pause in 2026 on this AI trend.
Dale, speaking of AI, I know you've got a few companies on your watch list. Two of those are in the tech sector. You've got Apple on your watch list. It's certainly, not performed as well as others in the Mag 7. Not the bottom of the heap. I mean, we've been looking at Tesla for that position. What do you like about Apple? Why is it on your watch list now?
Apple's been on our watch list for some time, Diane. As you know, we've called Apple multiple times. Here's where we're at with Apple. It's a household name. It's here to stay. It's very unlikely. When we think of AI, it's not really even led the race in AI. As a matter of fact, a lot of people are dissatisfied and disappointed in AI with Apple. But what I know is that China has caused a lot of uncertainty. We've got the antitrust regulations that are causing uncertainty. When we see all of that clear with deregulation, I believe that Apple has a lot of room to grow, a lot of price action to the upside. But with a name like Apple, There are strategies that we have around Apple where we're putting maybe Apple as a core holding in our position and then selling a covered call against Apple to collect that options premium as it continues to bounce between its support and resistance. That type of trading, if you will, is where we're at with Apple right now, and we're optimistic that it will break out. We've got our calls set at around 245. If we can sell at that number, we're happy, but that's a pretty significant increase from where we are right now.
Okay, and let's talk about another name on your list. I know you've also got Amazon on your list. I don't know if we'll have enough time to get to that, but I want to get to this one. You've got Eli Lilly on your list because we've talked about this before. It is a little bit, it's on the plus side so far this year, but it's just up 4% year to date. Let's talk about your views on this one because Ms. Schneider over at Market Gauge likes this one as well. She calls this the vanity trade. Tell me about your views on this one and why it's on your watch list.
Eli Lilly's going to have some potentially, and I'm making a prediction here, if you will. It may have a little bit of challenge here when it announces its earnings call. I think it's early next month. Q2 likely impacted Eli Lilly in a way that is going to be negative to investors. And we've got our close eye on that earnings call. If we see negative price action, if we see movement to the downside, we think that this is a good stock to buy at a discount at those levels. It would substitute for us a name like J&J, which we discussed just about 10 or 15 days ago as a position that we like very much. With you, Diane, we were on the show, I think, on the 8th of July, and since then we're up about 8.5% on that name alone. So it would be a cycle out of a, say, J&J position into an Eli Lilly, and I think that's a very good trade. In terms of the overall objective for that piece of money, it would be capital appreciation. I do see some upward movement in that particular stock. We're not buying it for much else except the potential of capital appreciation in the name. Current prices, of course, Eli Lilly, it's the leading company when it comes to its sector. But I'll tell you, that particular stock, in our opinion, could be sold at a discount simply because of what happened last quarter, which we do not see happening in quarters to come.
All right, that's Dale Smothers, President and CEO, RDS Wealth Management. Dale, thank you so much for joining us, and thank you for your most recent picks. He's got Eli Lilly, Amazon, and Apple on his watch list.